So what we're going to go over, guys, is entries. And I just want to basically explain some of the areas in where I've been buying and selling and things like that, in case people aren't really sure. Lost during news, but made it out with nice sales. Perfect. Perfect. That's really good. That's really good. And if you guys, if you want to share charts and things like that throughout this call, please put them in and we can have a look at them at the end. You know, even if they're just trade ideas at the moment, if you want any feedback or you want to just show us the trades you got, and remember as well to put those results that you get inside the results channel. Let's get that channel moving as well, guys. Yeah, all I wanted to do is basically just go over, just really refine on what we're going after when it comes to how we're getting into the market. So essentially, we are looking for price to create this sort of structure here. And let's say we're taking a sell. We are looking for price to come lower, to come higher, and then to take us into a sell opportunity. Now, it's as simple as that in respect of that's the pattern you're kind of looking for. But a lot of the time I have been talking about areas such as, you know, imbalance areas. So this is an entry we kind of took today. Now, this entering off of just any kind of imbalance is risky. But entering off of a certain type of imbalance, which lies within an order block, is a perfectly viable opportunity to sell in this instance here. Okay, likewise, when we are buying in the market, okay, you are watching price move down, making a high, and then sweeping this area here. And then you're looking for price to break above, and then you're looking for price to come back down and then move to the upside. And likewise in here, you're looking for areas to enter within here, such as maybe this pretend imbalance that we can pretend is here. And again, if the imbalance wasn't within this order block, then it wouldn't be a valid entry. And we are going to go over examples as well, guys. So just kind of buy into this at the moment. And we're going to go over examples in the charts and things like that. And this works on every time frame. So it doesn't matter whether you are a 1 minute scalper, whether you're a 1 hour trader, whatever you want, because this happens all the time in the markets. But I'm just trying to really simplify it. And the course will explain this in real detail. This is just to kind of give you a bit of a crash course now, so we can basically get ourselves making profits. So for your entry, for your sell entry here, what is essential to anything is that you have grabbed some kind of liquidity. So we want our liquidity grab to be here. We then want our break of structure to happen. And we want to identify out what is inside our range. Now, for me, if there's no imbalance, I'm not usually interested. So, you know, let's say, for example, there is this institutional area here. Okay, that there is your last up candle before the down move. And then let's say we have taken an aggressive entry, you know, aggressive candle moving down. That there is your engulfing candle, really strong. So that there is obviously price moving down. So we now know that the open of this candle is, let's just call it there, for example. And then what you're looking for is, you know, price action to carry on in what it's doing. And usually what you would like to see is wicks. So you would like to see a wick come into here, and you would like to see a wick come into here, which essentially is creating that imbalance. Now, you can enter in here because typically what you will find is there is, you know, this area here is an order block. So essentially we've got 2 candles right here. I'm just going to color that correctly. I'm just going to see if I can move that. So imagine, you know, this is the sort of price action going on. So 1 candle, 2 candle, that there's an order block, but this is your FU candle because it's swept, you know, above this liquidity here. But if you want to count basically the entire move, we'll use both candles here, and we've created this imbalance. Now your entry can be in a number of places. It can be right at the open of the imbalance. Why is it valid? Because we've got this order block, the entire move. It can be in the center, it can be at the top, it can even be really aggressive and up here at the open of the candle. Nothing is wrong with either entry. The only thing is, if you enter in down here, you're 9 times out of 10 going to get in the trade. If you enter up here, you're risking missing the move. But if you want to be aggressive, there's nothing wrong with that, because this stuff here will be happening here, here, here until we reach our targets. So we can walk price down is a classic saying. But let's just say, you've played in the middle, of this here. That is a perfectly good entry level. So you're looking for the liquidity grab. You want liquidity to be swept here, and then you want what's known as this here. Even without the break of structure, this is an engulfing candle. It's also known as a market structure shift. So it's a strong indication that price is going to sell off, and then you're looking for imbalance to be created within it. It really, really is as simple as that. And then you're looking for price to come in, mitigate into the imbalance or into the up candle, or in the 50% of the up candle, whatever you want. And then you're looking for price to come down. What's vital is that you've got to identify targets. So, if this area here is liquidity, for example, it's really, really important that you've got a target so you can target price action down. Because if you notice on the alerts I put today on AUD USD, we had a 1 hour alert, and I don't know if you looked at it or not, but basically it hit our target before it took our entry. So I said cancel the trade, because what usually happens when it's hit the target, it can distribute or accumulate, whichever respective of the sell or buy, and then it can just completely plummet through in the opposite direction. And that's exactly what happened, and we're going to go over that as well. So for example, if this was your sort of trade, you had the idea, and let's just say you set this area here, anywhere here within the imbalance, your target is here, for example, and let's just say this has happened, so you've missed it and price has taken your target first. That is now an invalid entry. Targets are literally one of the most important things, because if this target was still intact and we kind of come into here, this is going to bring us onto the next entry, which I'm going to draw out for you from scratch so you understand it. But does everyone understand where we kind of are with that model there? And I am going to save these and put these in the charts and things like that. So this is really just to simplify the whole thing. And if I invert the scale to save us drawing it, essentially it's exactly the same when you're buying. Okay, so you're looking for price to come down, break structure to the upside, come back into this imbalance and push higher, or come down to the open of the candle, whichever one you personally want. So they're the entry levels that you're looking at. So if I bring it back, and now let's get rid of this. I'm going to draw you another model which tends to happen a lot as well. And this is another really, really strong entry. So I'll do, because we did the sell last time, I'll do it in the buy this time. So essentially you're looking, you can see consolidation in this form here. You can see price doing this. And then, we can see price trending down, making a new low, pushing higher. Okay. And then you see this kind of thing happen here. You see price pushing higher just here. Now, what we were talking about earlier, okay, you've got the liquidity here. Now, let's just say, for argument's sake, there is, this is a down candle, so I'm going to change this to red just to be different. I'm going to draw this candle here. So we've got our order blocks here. I'll draw another one just to neaten it up a little bit. So we've got one here as well. So that's kind of like your down move. So this here would be known as your order block. Okay. And, we've got this wick. That's just an example. And then what we see is an aggressive push to the upside like that. And I'm going to make that my green candle. Yeah. And this is so hopefully, this will make sense now after we've kind of gone over this because this will really help you with entries. So, you know, we're going to have the wick here, and we're going to have this here. So what we can see is this imbalance, which is here, because we've got the wicks. So we've now got our imbalance. We've got the open of the candle right there, and price is moving higher. It looks like we've missed our entry, right? So where we said earlier, if your target has not been taken yet, this is still valid. So what I'm looking to do is to identify where we can go. So what a lot of traders will do is they'll set entries in here, okay? Or what you could be doing is identifying this as your, and we went over this last week, internal liquidity. And this here is your external liquidity, which was grabbed. And you actually are looking for price to come back down either into the imbalance or into this candle to then take your target. If price misses entry, can't that be considered as internal? Yeah, exactly. That's what we're kind of explaining now. Does that make sense? So that there is internal liquidity here because it's missed where we're going, and this is the range that we've kind of created. So on a higher time frame, that will look like one range rather than sort of two cycles. So, you know, again, your entry can either be down here at the open of the candle, it can be at 50%, it can be just at the top of the imbalance, it can be at the end of the imbalance, it can be 50%, it can be whatever you want, but just understand, if it wants to, it can tap under this liquidity right here, and it can move to the upside from anywhere it needs to move. Now, you know, I personally would rather it come into the imbalance and push higher, just so I'm in the trade. How do you identify the order blocks properly? Oh, that's it. We're going to go, well, I'll show you loads of examples, but basically all I want you to think about is the entire move. So this move down is essentially an order block. Well, technically an order block is the last down candle, but an order block of areas is 1, 2, 3. It can be 5 candles. It can be, there's different types. In the course, I'm going to go over different types of order blocks as well. So that will all make a lot of sense. It might not be, because it's quite deep, it might not come in module 3, but module 4, when we go really, really deep, I'm going to really go to town on that kind of stuff for you, but it will make sense. For now, don't even think of the word order block. Just think of the word move of the area, the whole area that influenced this new low. So, you know, what we can identify here, again, really, really important stuff is, you know, we've got liquidity being built, price is moving lower, price has created this liquidity here, we've swept below the liquidity, we've had a very strong shift in this form of this engulfing candle to the upside, and then we've had another push higher, break in structure here. So we have now got our break of structure, and price has created this liquidity but in the form of this internal area here and carried on pushing higher, manipulating the markets. However, at this point here, we can see we haven't taken, you know, we haven't taken these targets. So until that happens, this is valid. Now, if price action was to take us like that, any hope you have or any idea you have of getting a trade in here, cancel. Even if this happens and you miss the opportunity, it's more likely and more risky that actually, because what happens is this. So price does this and then moves lower, and then it will come up here because that there is now external liquidity, and this here is internal liquidity on a higher time frame. So it's highly likely that this is actually not going to be respected. So that's why we do what we do. And that's why we're looking to wait to see if our targets are there. And this can be short term, this can be long term, whatever time frame you're on, it really depends. And as I say, this works on every single time frame. So it really doesn't matter whether you are trading on the 5 minute, the 1 minute, the 5 second, or whether you're trading on the 1 hour, the 4 hour, or the daily. It's really, really up to you. But do these models here make sense so far? I am going to tidy these up for you as well, before I put them into the Discord, because I'm going to label it up and things like that. Yeah, look right there, 5-second chart, and it is crazy down there. I wouldn't advise doing it, but yeah, you can get 5-second charts and things like that as well. But yeah, that is literally, as simple as it is. Now, obviously, where can we identify these areas? And it is quite simple. We'll just go over it again. I've done it before, but we'll do it again. To be, conservative, you need to make sure that you're on the daily chart and you're in direction with the daily or the 4-hour chart. And essentially, you are on a lower time frame, whether it be 1 hour, 4 hour, whatever, and you're waiting for price to do that inside your discount level, wherever is your point of interest on the daily area. So that's exactly where. So we look for these models in our points of interest, because a lot of people have been asking lately. Yeah, we're going to go over it, Luke. Don't worry, we're going to show you some examples. So a lot of people have been asking lately, what do I do when it gets into here? Well, this is what you look for. Now, if for example, you've got distribution or accumulation and it has not left any imbalance, then it's a riskier trade, because think of imbalance like a magnet. Price has to fill it up. It has to fill it up, and everything has to be over exaggerated. So it has to come back at some point. It doesn't have to all the time. It can just miss it and then fill it completely on its way up, because it's the same thing. But a lot of the time we can get in on these areas, and we take the short-term entries just to get into profit. Another thing, before we go into the charts, if the break of structure is weak, it's not a good sign. So for example, if we have just about closed above, but it's not obvious, and we're kind of really slow around here, and these candles are really, really small, and we haven't got the engulfing candle, and we haven't got imbalance, then they're the areas you kind of think, okay, this isn't the type of move I actually wanted. It needs to be a strong push down, a strong engulfing area, and then another candle maybe which creates your imbalance and drops lower and things like that. And then you want price to come back in and take you into profit. So before we go on to the charts, guys, any questions on that? Don't be shy. No, there's no such thing as a stupid question or anything like that. If you have got anything you want to know, please make sure you let us know. What about if there is a few candles with the imbalance on the down move? So are you basically saying, what if we've got something like that, and then I personally sometimes confuse if I should set an order and I see candle or imbalance. I do get stuck on imbalance, which imbalance to target. So let me draw it again just to make sure it's really simple. Okay, so for example, if we are looking to, hang on, if you're looking here, okay, let's just see, we've got, liquidity being built up here, and, it's making its way down. We've got our big break, and, we want price to come back into this area here and to target these areas here. Now, another good question. Let's say, for example, you've got imbalance here. I'm just going to draw that. And then you've got another imbalance down here. Is that kind of what you're talking about? Is that what you mean? Because obviously you do get that. So it really depends on how aggressive you want to be, and if there is an obvious. So if this is, we've got this down candle here, and big push up, which let's just say that's there, created loads of imbalances and things like that. It's trading. It's you can enter here but at your own risk. Typically, normally, price should come to this imbalance here and not this one. So what would usually happen is there'll be a candle, here like that, and you can literally bring your entry you know, with your stop loss. So your stop loss can go under that one there, and your entry can come in here, and then that would be your target. It's just really nervy because you have got imbalance below. So that's kind of like a red flag for your trade. So if you want to be conservative with it, you know, wait for price potentially to come here. But what tends to happen when this situation happens here, I would enter on this candle here short term, because what tends to happen is price perforates through our first level. And then this is internal liquidity. If we've got liquidity up here, for example, it will come down and then press higher. So you could, you know, scalp out here and then come down there for another entry. They're both equally valid. This is more risky because we have got imbalance below, but usually price structure should respect this imbalance and push higher. So if you want to just basically backtest it, or maybe try on a demo account, just see how many times it's happened on the first go rather than the second, because it's probably happened more often than not here. So, you know, best practice is to wait for, you know, one area of imbalance rather than two. But if you see it, then yeah, definitely there's nothing wrong with the first one at all. What I would say is it really depends on how big the imbalance is. If it's tiny, I probably wouldn't bother. If it was nice and sort of chunky and there was a lovely engulfing candle and we were within this order block, then yeah, I'm taking it. I'm probably going to take it right at the bottom of it rather than at the top, because you tend to find the risk to rewards not as good. But does that clear it up on that? You know, first one over the second, but it's risky because it could definitely take the second basically. But it does respect it. Or maybe go up a time frame and that one candle should work. Yeah, so if this is like a 5-minute chart, then this you go up to 30-minute, that's probably just one candle. Would you go for the imbalance that is part of the larger imbalance? Would you go for the imbalance that is part of larger imbalances, or give it more importance? What? So no, you're not talking garbage. So it really, what we'll do. I think to answer that, we'll have a look at. We'll see what we'll do. We'll probably be able to answer that in the charts, if that makes sense. But essentially, yeah, it's the first imbalance. It should respect, and it shouldn't come down here, but it can do. You know, like I said, I think best practice is to wait for, you know, to see when you get this here, and it happens. You know, it happens all the time. But you know, this has all been kind of saved. Let's go into the charts and see what we're working with. So, I mean, firstly, I'll go over the entry that we took on NAS, and then we'll kind of work out where we are with it. So, you know, this was on a 1-minute time frame. Okay, all I was doing, okay, what we can see here is, maybe it makes more sense on a 5-minute, but essentially liquidity grab here. So liquidity grab, imbalance right here. So that there is technically one candle. It's got the wick and things like that. If you were to go down, you would see more. Okay, so there's your 3-minute area there. That's your order block. There's imbalance in here. So we can actually see we filled this imbalance right here. And then we pushed higher. So you could have literally taken an entry here. Okay, now if you want to be really conservative, then you use this area here as a point of interest. And what you'll see when price came into the area, 1 minute there. So this is it kind of playing around. We can see the liquidity grab right here. Price has broken above here. There's an entry, but you know, I didn't take it at this point because, like we said, it wasn't that obvious. I wanted price to come higher. So because price sort of came down and pushed up higher, this is where you have kind of a lot of different candles. And I saw this wick here traveling down, and then a bit of movement up and things like that. And we did have this imbalance kind of here, but it didn't make as much sense as it should have done. Price came in, a bit of play around, aggressive push up. You can see we've taken up the wicks. We've got this liquidity, which we've targeted. So right there, you know, we've taken that liquidity there, and we've got this imbalance. It's literally within this order block here. So the entry anywhere inside this imbalance is good. Now, if you would have taken an entry at the last down candle, this is an example that you would have missed it. If you would have taken it Here, the risk to reward's not on because you're looking for 3 to 1, but it would have got you into profit, and that's the important thing. But if you're trying to, rapidly grow accounts and things like that, if you come into the 50%, which is nothing wrong with that at all, then you get the trade, you're triggered in with very little drawdown. If you're waiting for price to come to the bottom, that's the same as the bottom of the candle anyway. So yeah, that there was a really good entry. In terms of targets, it's very, very short term. This level here indicates the daily area right there. That daily area is an area we want sales to happen, because we took this liquidity, we broke down here, and we literally came in to that target. Once that target was hit, what happened? Price broke structure. So now what you are going to be looking for on NAS is for price to come back up to this level here. This here, 1, 2, 3, 4, 5 candles represents an order block. It's the move up